Alright, so this is gonna be a small rant or maybe some discussion video, right? I just want you to consider the fact that I am right here calling the markets almost every day, and somehow or rather the markets seems to stop the rally or seems to reach the levels that I have called for prior to that happening. Alright, and many long-term investors thinks that charts are not important and that the markets are almost entirely based off of company fundamentals, right? But to me, the market is just a instrument for the rich, or okay, not say the rich, but for the well-informed to take the money away from the uninformed. Okay, and investors always give these types of excuses like, oh, eventually the company's gonna make money and they're gonna grow unless it's a quote unquote bad company with bad fundamentals. Okay, but the thing is that they never considered that this was maybe just a distraction, right? Because ultimately the values, right, the stock price, the share price, it's determined by what? It's determined by the market maker itself. We as investors or speculators have no control over the price. And if they are so bold or so sure to say that they can't time the markets, then wouldn't it be silly to think that, oh, but they know that in the few years to come the share price would be higher than what they bought at? I mean, come on. It's the same as short-term timing the markets, isn't it? It doesn't make sense when one tells you that, oh, the markets can't be timed, they are random. But I am very sure that in the next few years, the share price will be above my entry point. Or they hope so. Which begs the question to who are you leaving control of your capital with? Ultimately, when you enter the market, you are technically a risk manager, and if you are the manager and you're pushing aside your responsibilities and you let someone else take control over your capital, in this case the markets, wouldn't it be silly, right? Because ultimately it's your money, so you should be the one that takes the responsibility for it. Yes, you can say that, or most of them says that it's either all in or zero. And I have many years ahead of me, right? For those young investors, right? I have many years ahead of me, but they never they never thought that how long it would take for them to just recoup the losses that they have um, that they have acquired if they were to follow this concept of theirs or this mindset, right? So let's say, for example, right, you buy Tesla, it goes up to okay, let's say you're buying Tesla right now, the price is 173. Okay, next few months or into the next year you lose your bet, right? It goes down to 60 or 80. That is technically a 50% drawdown. So how long does it take for you to get 50% recouped? Right, so when people are buying here, they are technically saying that, okay, I'm gonna sell at, let's say, around 300. Okay, that's like a 100% gain. Okay, let's just say it that way. Okay, because I have my levels here, just use those levels for reference. Okay, so let's say you're buying at 173 and you're expecting Tesla to go to 300, and if it doesn't go to 300, I'm gonna hold it till it gets to 300. And if it doesn't go to 300 at all in the next upcoming years, then I'll take that as a loss. How is that even logical for a risk manager? Like, you would risk everything for 100% gain? Like, isn't that the same as buying lottery? So you might as well just buy the lottery, right? So the thing what I'm trying to say here is that if you buy at 73 and price drops down here, that is a 50% loss. And right now, to get to where you are expected, or where you have expected the price to be, that's going to be a 150% increase from $80, right? The $80 level. Does that even make sense? Right? From if you think that from this 173 to 300, that is already very tough, then why do you think that 150 is it's easy? Like, oh, I can tank this drop, I'll just dollar cost average in. Right, at some point you're gonna wake up and then you're gonna find that you cannot out dollar cost average the market movements, right? Because currently we are not in that environment to do so. Then how would you take that as a loss? How long would it take to recoup back your losses, and how much time you would have wasted? Money is infinite, okay? There is no limit. But your time, that's a different story. That's a different currency. You can never replace time. You can never replace the time that you lost. So let's say if you're playing like a position trade, you're gonna put all this amount of money in, and then you're gonna retire with this money, and you only can take out the money when you are 60, 50 years old. That is 50 years down the road that you're gonna hold this stock, and if it doesn't go to the moon, and if it drops back to earth, you are not only losing your capital, but you are losing 50 years of your life. It doesn't sound logical, right? Because within this 50 years, let's say nothing happens to the share price, okay? Best case scenario, nothing happens to the share price. It just consolidates range bound, and it's stuck at 173. What have you wasted? Your time. Yes, you do not lose your capital, but your capital depreciates over time, and at the same time, you lose your time. How is that a logical system to go about in this market? Because they are brainwashed, or they are led to believe that as long as I have time on my side, I can do this type of go home, or should I say this type of home run scenarios. It's either you go big or you go home. But in reality, that doesn't make sense at all if you think about it that way, right? And to further prove to my point that the market is not random, can you tell me why? Why does the price not trade beyond this level here? These three levels, alright, these three pivot points. Why did the price not trade beyond? Are you telling me that all the traders and investment firms and everybody that is longing Tesla is buying here at the same time, is buying here as well at the same time? They're all thinking that, okay, right now this level 209 to 223, we are only doing buy, we are not selling. And if that's the case, who's gonna sell shares to you? Because right here, as you can see, the price refuses to go below 200, right? It tapped 209 a few times and it refuses to break below. So if nobody's selling to you here, how would you be able to buy them? It doesn't make sense, does it? Because a market, it's a transaction between a buyer and a seller. You need to have a seller to have a buyer, vice versa. That's how it works, right? So enlighten me. Why? If it is random, did everyone just choose to dogpile in this level here and just say, okay, I'm going all in, I'm not selling Tesla, I'm not shorting it, I'm just gonna buy right at this level, right at this 209 level, right here. And right, when you come and think about it, it's weird, isn't it? Huh? So right here as well, we're gonna all sell at 314. We're not gonna allow it to go beyond 314. Right, so at this level 314, everybody's selling, nobody's buying. It's ridiculous, right? If you want to sell here, you need to have a buyer to buy it from you. So how can you explain that? Right, so back to my risk management concept right here. It is illogical to think that you're just gonna dollar cost your dollar cost average your way out, and at the same time you're not gonna lose anything, right? You don't if you don't sell, you do not lose, right? You don't lose the capital, that's right. You don't realize your profits and losses, that's right. But you're losing time. You're not gonna have another 50 years after you have lived through 60 or 70 years. What's the percentage, and what's the percentage that you're gonna be here clicking the buttons and you're gonna redraw everything out and you're gonna have fun at 150 years old? What are the odds? There's no such thing, right? There's no such thing. So they're drawn to believe that as long as they dollar cost average, they are gonna beat the markets. Right. That strategy works when the Fed is on a QE madness. But right now, the Fed is having a QT. So it just doesn't make sense at all, right? You can be wrong multiple times if you do short-term trades, right? And then you can still make back your losses within a short amount of period. But if you're doing this type of long-term investing and retirement strategy shit, you only have one chance. And if you're wrong, you're never gonna recover because you do not have time to recover. Does that make sense? If it takes 10 years for you to hit your target, it's gonna take 10 years for you to recover that loss if you are gonna lose the bet. And at the same time they can say that they have no control of what the market is doing, and they are purely just hoping. I'm hoping that they will have a fair evaluation of the company. I'm hoping the CEO of the company is going to do something about it. I am hoping that the market gives a fair price to the share price of the company. I am hoping this and hoping that. It's all hope. It's not guaranteed. And if you are working, let's say in real life, if you are working, do you hope for things to happen, or do you try to make it happen? That's the difference, right? You do not hope that your boss can give you a pay raise. You ask and you work for it, right? Because you understand that there's no point in hoping. You gotta show results. You gotta put in effort to get what you want. You do not hope to get what you want. Only gamblers hope. Oh, they hope. I'm hoping that I get a better hand this round. I'm hoping I'll win the lottery. I'm hoping I'm gonna win. In Singapore, we call it the 4D and the Toto. I'm just hoping. When long-term investors play into the market, it's the same mentality. Oh, I'm buying at 173. I'm hoping that it goes to 300. If it doesn't, I'm fine with losing 100% of my capital. You might as well just buy some 4D numbers with that amount of capital, and you might break even, you might not lose your capital, but you might break even, and the results come pretty fast, like a few days. I think few days. Every week there is like 2 or 3 times draw, so somehow or other you're gonna break even. But this right here, the chances of you breaking even, yeah, lots of the chances, unless the market goes into a parabolic descent. But what makes you think that when the market goes back to your entry level after having a sharp downturn, what makes you think that you're gonna exit and break even? At that point of time, your mind would be, you will be thinking like, it came back to my entry. Maybe I was right after all, and it's gonna go to 300, or maybe it can just go to 200. I'll take it if it goes to 200. But then the market goes back down again. Right. So this is why you need to have a plan, and your plan must be logical. You don't plan to DCA into all the downswings and then hoping that it's gonna go up. You need to plan your entry and exit. It's like it's like a it's like a game. You don't keep playing a game when you are losing. You analyze, you practice to make sure that you do not lose the next round. Same thing applies to investing, to trading. Same thing applies. Don't tell me investing is different from trading. Unless you're telling me you're putting money in and you're not ever gonna take it out. That way, I agree with you that it's different. But other than that, if you're ever thinking about taking out your money from the markets, you're essentially trading. Right? Investment is just another term for long-term positioning trading. You're looking at the long-term horizons into years before you exit with profits. You're still gonna exit with profits. You're not gonna put it in the markets forever. So that is a trade. That is a super long-term trade. And what is easy to forecast? Long-term or short-term? Obviously, it's the short-term. You can't deny. You're telling me that you can't time the markets, but you can see what's going to happen in the future? That is ridiculous. That's bullshit. Okay? I don't believe that at all. If it is so hard for you to time the market like tomorrow, like what's going to happen tomorrow, what's going to happen the day after tomorrow, if it is so hard for you to do that, and you're telling me that in 20 years, stock price is going to be good, it's going to be fairly evaluated, you're talking nonsense. It's bullshit. It doesn't work like that. Right? It doesn't work like that at all. When you listen to this type of this point of view, it sounds ridiculous, but that is what a lot of retail investors are swallowing. They're like, so, oh yeah, I'm not good at timing the markets. Oh yeah, I'm not good at reading the charts. But they said that in the long term you will win as long as you can hold your money inside, as long as you can take the hit. Just do not do anything and just buy in every time the market drops. That is what they are conditioned to think. And what happens when the markets just crash, or they just can't take the losses anymore? They're gonna realize the loss, and when the market goes back up again, they're gonna enter again, and then when it drops, they're gonna realize the loss once again. Or some are even better. They don't realize it at all, and then they just let the markets do its thing, and when they come back 5 years later, they're down bad, negative. You never know, right? Because for the past 10 to 20 years, for the past 10 years, okay? It started in 2009. For the past 10 years, the market has been rallying non-stop. If you look at the chart of the S&P, you should know. It's a non-stop rally from 2009 all the way to 2021. And you think that it's going to continue? Yeah, sure. If the Fed resumes quantitative easing, yeah, I believe that's going to happen. But are they doing that? No. The policies have changed. so does the environment. You got to understand the macroeconomics. Okay, so I think this is just to provide a alternative viewpoint to what the YouTube have, like majority have, like just dollar cost average and you'll be fine. Look years into horizons, look into years, don't look at days or months, they're just fluctuations. I'm just offering you a different perspective, and if that helps in widening your, I mean, widening your perspective or your viewpoints, opinions, or whatsoever, then great. If it doesn't, or you choose to narrow it down to what you like, that's great too. I'm not here trying to make you buy into my concept. I'm not selling anything. Everything's for free, right? Because I'm just doing my practice down here. So if you find it helpful, maybe you can spread the message around, or maybe you can inspire others or open their viewpoints. Because the thing is that I come from a 1990 generation, okay, and somehow or other, as you can see, the time that we're right now living in, we're close to some shit happening in the world. So this is just a reminder or a caution, okay, to not just be more careful with what you consume on the internet, or what people try to tell you. You need to have some critical thinking, right? And this video is for my peers if they are watching the video, and I hope they would find it helpful and maybe make them reflect on their strategy or their way of thinking. Okay, so I think this is it, right? The whole point I'm trying to make is that you do lose something, right? Not just capital, not just your own capital that you put into the markets, you lose something else as well. So just have to be mindful of that, right? And that's it for this video.